Good afternoon. My name is Scott Rudlett, Chief Strategic Officer at T3Live.com. Welcome to today's recap. A look ahead.
大家好，我是主持人赵冰晶，欢迎来到今天的直击美股。今天是11月份的最后一个交易日，我们在进入11月份的时候呢，似乎一切都还是谜团重重；而我们在走出11月份的时候呢，似乎一切都已经真相大白了。特朗普以绝对黑马的形式赢得了美国第45任总统大选，而在他当选之后呢，股市也一反之前不看好他的态势，不断的冲击新高。而 OPEC 也终于在今天达成了8年以来的首度减产协议。那么交易员 Scott 对于11月份有何总结，又对于12月份有何展望呢？我们来进入今天的交易员采访。Hi Scott, last trading day of November. It certainly is a November to remember. Dow Jones hit a record high, and we finally had an OPEC deal. But the S&P did close the negative. What's the reason, and what to expect in December?
I think today was a little bit of a head scratcher, right? You had oil up 8%, so you would have thought the S&P would have had a better day considering how many oil stocks are actually in the S&P. But you got to think about where we came from and the all-time highs we had today that sometimes in the end of a month get sold off. We've talked about how to get a calculated move within a sector. And if you look here at the S&P cash, all right, this was the time to get your meaty trade. Remember the pre-election sell-off? Okay, that took some risk down, and then you had your rally back. Everyone was asking, what's going to happen post-Trump? What's going to happen post-Trump? Well, right here, when we took out this descending trend line, okay, that was your first signal that we're going to be rallying. The better signal was when we digested above it. Okay, so the same thing here, post-Brexit. Remember the move lower that had the snapback? Then you saw digestion higher. Then we took out this descending trend line for 80 handles. Well, here was the same similar move. And then the calculated move was from here up to new highs above that 2193. So for today, I do think it was a little bit of a head scratcher. And I think that you had to take some risk down just in case. Why? Because this was a red dog reversal. What's a red dog reversal? When you push above a prior area and it doesn't hold. That shows that it was distribution. If it was healthy, it would have closed on highs and been accumulation. So for me, I'm going home light. You have a move where it made new highs, closes near the lows. That means for today, sellers took control. So I would be a little bit careful.
Surprisingly, OPEC reached a deal after 8 years. Suddenly, I'm hearing the voice, oil price will go up to 80, 90. You think we'll see those prices soon?
Let's cross each bridge when we get there. I'm thinking 52 quickly, okay, and then maybe first quarter 2017. We'll see somewhere near 60. So let the voices talk about 80, 90. They're probably trying to create headlines for page views. But another important thing that I did with you and Annabelle all the time is showing you long-term trends. Look at the XLE, which is all oil names, all right? It was in a very bearish trend. When did that start? Over 2 years ago with this head and shoulders top. Then what happened? It broke the 200-day. It was below the 200-day for over a year and a half, meaning stay out of the way. Then what happened here? We've been talking about how on a macro level, here's your 200-day, the oil stocks were above it. So that means institutions accumulating it. That means you could be long it because why? Above the 200-day. Here, below. So at this point, it's at highs. We talked about 76 being a target a few weeks back. Now it seems like, you know what? We get 55 in oil. You could see probably a move closer to 80 in the first quarter of 2017.
Well, we just had a great month for the equity market. Not such a great month for precious metals. Gold prices keep going lower. You think how long until we see a bottom?
You know what? Let's try not to think too much. I just showed you the 200-day in oil names. No one thought that oil was going to go from 80 to 25. So you know what? Let's take our opinions out of gold because if you look here, look at this. Gold got back above the 200-day here to reverse the trend a little bit and then broke back below it right there and also failed right into the descending trend line. Did it get above and stay above like the S&P? No, it failed. So you look closer here and you will see that post-election, gold has been for sale. It lost all the moving averages here. This should have been your stop at the 200-day, and now look where it is. It is below the 8-day moving average, not above it, below the 21, below the 200. Yes, is it oversold? It is, but is it very broken? Definitely. So at this point, I would just say avoid gold, and it's in a little bit of no man's land. Maybe at some point, I don't even know where it could be as far as some support, but this is your yearly lows. I'd be surprised if it gets here, but at this point, it's not. It's not a long and it's too oversold to be short, so I would just avoid.
Okay, unless I want to get you touch on a little bit on the tech sector. Tech is not doing so well after we have President Trump, you think we'll continue to see some pullback in the tech sector?
It's at this point, I think it's hard to trust. You definitely haven't been able to buy strength. If anything, it's just a rent to trade. I'll give you one example of a rent to trade, just because Facebook is something that we trade often. Okay, it announced its buyback program. Remember that? That was right here. So it was a good trade once it cleared this spot. But then look at the small red dog reversal here. Look at the rejection to 21-day, and now it closed back down. So at this point, this descending trend line here, rejected price versus getting through it. So at this point, just take trades here. I think high beta tech like Amazon, Google, even Apple, they just need more time to create new patterns in order to trust better.
That's what we have today. Hope you had a wonderful trading month, and tomorrow is another day.